And global financial markets continue a downward spiral today with no end in sight to the US-China trade war, which has now spilled into currencies as well. Now, export-reliant South Korea leading the losses today with the main Kospi index losing over 1.5% in trade, while the Kosdaq saw even more losses and closed down over 3% today. Over in Tokyo, stocks ending the day at a 7-month low, the Nikkei plunging as much as 2.9% at one point today to finish down 0.65%, while the broader topics lost 0.44%. China shares, meanwhile, saw earlier declines of over 2.5% on the Shanghai Composite to its lowest level since February. Today, it closed down at the close 1.6%. The Shenzhen Composite also down 1.8%. Over in Hong Kong, the Hang Seng also tracking losses along with those two indices. It tumbled 2.3% earlier before recovering somewhat to end in the red by 0.7%. On to Asian currencies, where most regained some footing today. People's Bank of China's firmer than expected yuan fixing saw the currency appreciate from yesterday's lows and sitting above the 7 per dollar threshold. The onshore yuan is at 7.0228 against the greenback, while the offshore yuan, well, that is exchanging at 7.0514. Safe haven currency, the yen, rallying to a 7-month high, though, against the dollar before dropping back. It's now buying at 106.57. Currency wars taking center stage after the yuan dropped to its lowest level to the dollar since August 2010, prompting the United States to label the country as a currency manipulator for the first time since 1994. But China has hit back today, the central bank announcing that it is, and I quote, resolutely opposed to being labeled a currency manipulator, and it also argued that the yuan exchange rate is driven and determined by market forces. The currency row follows threats just last week from Washington to hit Beijing with an additional 10% tariffs on $300 billion worth of Chinese imports. Now, that means that tariffs will soon cover almost all Chinese imports. Now, for more on the yuan's movements, we are joined tonight in the studio by Jeff Ng. He is Chief Economist, Asia at Continuum Economics. Good evening, Jeff. Good to see you here this evening. So, you know, doom and gloom across global markets today. For a second day, we've seen investors pretty bearish on this one. Do you foresee a correction anytime soon? Are we going to see more of a bloodbath?
Well, I think nowadays it's going to be increasingly difficult to predict because any good news from the US or China can certainly push markets back by 1 to 3% even within one day. But any further bad news from the US or China, more retaliatory measures could certainly shift markets down further. And I believe that overall, fundamentals are pretty weak. And I think it does place some downward pressure on both currencies as well as equity markets.
Jeff, today China clearly denied those US accusations, calling it a currency manipulator. But, how accurate is that label? Is it just symbolic as well? Because what else is the United States going to do? But if it is true that it is manipulating its currency, that would, have a serious impact on global markets.
If we define currency manipulation as deliberately weakening your currency, I think China does not belong to that definition over the past few years. Because for a long time for now, especially during the past year where the headwinds were strong, China has been actively trying to place its currency within a certain band, preventing the currency from going above 7 and hence weakening the currency even further. However, I think market pressures are strong, and I think the move yesterday was a bit to allow some of these market pressures to weaken the yuan a little bit. So I don't think, in the US definition, it can really be defined as being a currency manipulator if we define it like that.
Nonetheless, the PBOC's moves with the yuan, they have rocked the markets quite a bit over the past 48 hours. It isn't the first time that they've lowered the yuan, though. Back in 2015, they did the same to ease growth at that point. So, what do you make of its moves this time?
I think this time around, there's definitely a lot of downside risk to GDP growth. We have seen Q2 GDP already slip to the lowest since the 1990s. And I think that the movements are also a bit in line with what the markets have been a bit fearing. If you see the global trends, I think the safe haven currencies like the yen, the Swiss franc, as well as the US dollar have been strengthening, whereas some of the more risk-averse ones have been weakening, like the Malaysian ringgit and the Singapore dollar. So I think going forward, China will still have to manage a bit of this stability. They do not want to weaken their currency too much within too short a period of time, and that could destabilize both their domestic as well as international markets.
So going forward, do you agree with other analysts who expect more depreciation for the yuan?
I think since yesterday's move, the chances of the dollar CNY weakening further and going up higher to 7.2 has increased in our view. Initially, we were placing that as more of a tail risk, about 10% probability, but now it has risen by around 30%. So I think going forward, expectations have to be anchored, and especially the next few days, the PBOC fixing will be keenly watched in order to see whether the PBOC will weaken the currency further.
Yeah, Wednesday could change everything yet again. Jeff, thank you so much for coming into the studios to share that with us. We've been speaking there to Jeff Ng, he's Chief Economist Asia at Continuum Economics.